Very quick thought ahead of tomorrow. This is a really big number. The stakes are very high. We're considering last time a domino fell from NFP that created a VIX 65 event as the dollar got walloped. We've got more of the same. Dollar was soft today, even though that's bounced above the one-year lows. The yellow light's still on the dollar, but bonds right now, this is serious stuff. Bond bulls look like they are insatiable. We continue to drive yields lower. Today we had a solid ISM services. Tried to sell bonds, didn't work. Bulls came back down. Look at the chart of the 10-year. I've been watching for whether or not this is going to resolve lower. And as I've said, I don't think you want to be involved in any economic situation when this yield drops further. To me, this only happens if the Fed needs to go 50 because we are really slipping in the economy. So today, getting back down almost to the lows here of the last couple months, with the exception of that tick on the candle from the August 5th crash in equities, bonds, once again, at the strongest point they've been in the trend. So clearly, we've got some consistency and demand happening. And I vision basically three possible scenarios, two of which are probably bullish for bonds. Whether inflation comes down just naturally and in a good way, then we could start cutting. Probably not bearish for bonds. The other main scenario is if the economy does really slow down, we get a soft print tomorrow, then bonds are probably going to rally like crazy, and we'll probably get that resolution to the downside in yield. So that's one thing. The other thing is that Bitcoin is looking very weak again today. This is a chart that I've been talking about for months. Red light on BTC because of the consistent weakness in this chart relative to other risk assets. So if we get a risk-off event tomorrow, I think Bitcoin is at big risk too. So coming back to the risk radar, the yellow light for bonds. I'm going to extend a little bit here and make it green just because we're already putting in basically lower lows in the yield. Hopefully I'm not getting ahead of myself. The dollar stays yellow because the dollar did get a little lift here the last week and is up off the lows. And actually the dollar, I feel like, could have some reflexivity with the rate cut stuff that maybe is hard to predict. Generally, cutting rates deeper is bearish for the dollar. But if it does help juice the economy in any way, then there's a feedback mechanism there. But most likely the dollar will probably end up going red too. Somebody asked the other day, why is the dollar yellow, crypto's red, and stocks are red? All that matters for the stocks and crypto is the dollar. You're totally off. That's not the case. Dollar's got a lot going on right now. Likely to turn red, though, if yields dive lower, and that's kind of my baseline for tomorrow. It's going to take a big number, I think, something well above 175 to get stocks rallying, bonds selling off, though, and more importantly, it seems like most numbers around the consensus or lower will yield lower yields, lower stocks, lower Bitcoin. But let's hope it doesn't happen. Let's hope it's a great number.